So the three companies I'm going to talk about today are Alibaba, Tencent, and JD.com. If you're in the UK, JD.com is not the sports shop, it's a conglomerate tech company in China, and I'll go into a bit more detail about this company a bit later on. But I suppose the first thing to realise or to note is that, you know, if you look at the news, for example, around China and the economy, it's like complete doomsday. So like up on the screen now, for example, you know, it says China's exports to rise, but deflation persists as the economy enters 2024 on shaky footing. China's consumer prices fall for the third month as economic recovery lags. Chinese economic outlook, inflation data further confirms weak demand in China's economy. And so like, the key thing to look at, right, is that this is news for today. This is not the news in 2 years, in 3 years, in 5 years, in 10 years. And news is always typically negative. And when you subject yourself to negative news, typically this is going to induce a level of fear. Because you're scared, you decide not to enter the market, you decide not to make a trade, because you're looking at the immediate news. And so the key thing to consider is like to get a bit of perspective, right, on the situation and understand that like markets operate in cycles. You know, they go up and down, they go up and down, they go up and down. Typically, you know, when everyone is positive, when everyone's like, oh, everything's going great, you know, that's when I get anxious and nervous. Because I know once things are sky high, there's only one way, there's only one direction in which they can go, and that's down. And just like that, right, you know, when things are down, when it's doom and gloom, I'm kind of like looking at things, and it's kind of like the typical thing of like in turbulent times, in difficult times, there are always opportunities. And to me right now, like these three companies represent really good opportunities if you're going to look to make an entry in them and hold on for the longer term. So when I say the longer term, I'm talking about 3 years, 5 years, 10 years from now. And so bearing in mind what I said about the market operates in cycles, you just have to have like a level of conviction that you think that things are going to improve with these companies in the future. And if you do think that things are going to improve over the next like 3 years, 5 years, 10 years, 20 years, and so on, then these potentially represent like a very good deal, you know. And they're kind of almost like trading at a discount because everyone is reading the same news. Everyone is scared and anxious. And because everyone is scared and anxious, like no one's buying them because, you know, like the price on the market is not necessarily like the true reflection of the value of the company. In fact, what it is, it's a reflection on sentiment. And so Alibaba, for example, you know, this company is like a conglomerate. It's the 6th biggest company in China by market cap. And on Forbes's list in 2020, it was considered the 31st largest company in the world as well. And they have like a huge business. The business is around like e-commerce, cloud computing, AI, media, mobile phones, you know. And so it's almost, again, it's this thing around like looking at the market value for this company. Is it a true reflection of like, you know, I talk about like the value a company brings to the world. And so if you look at kind of price history, you know, right now it's at 70.55 Hong Kong dollars. And typically like the way I look at this table is when I'm looking at pricing, I'm always looking at scope for growth or movement up. So for example, in this situation, you know, I'm looking at it at like $70 and 70.55 Hong Kong dollars, but I'm looking at like where it's been in the past. Now, yeah, some people will say to you like past history is not reflective of like where it can go, where the price can go in the future. At the same time, it's kind of just looking at this in the context of, you know, the market operating in cycles. So when the economy is great, you know, look at where it can perform. It can perform up to 300. When the economy isn't so great, it's down to 70. And so for me, it's like this is a perfect entry point. With view of kind of holding it on and just observing when the economy recovers, right, and where the price can go in the future with that in mind. And again, you know, I'm now looking at the like 1 year chart, and again, just over the last year, it's looking at a very, very reasonable price. You know, it's not necessarily at its lowest, but it's near the bottom, right? And again, you're never always going to time the market perfectly. And I would just say that this is like an incredibly good opportunity right now. And again, this all comes back to like stuff that I've mentioned in the past about like a changing world order, or kind of really observing a decline in certain economies and other economies that seem to be growing. And this comes back to stuff in a book by Ray Dalio. The book is called like The Changing World Order, and I've mentioned this chart before where I'll put it up on the screen, where it just kind of identifies or it maps out like where China's economy is heading in comparison with the US economy as well. And as you can see from here, the red is the Chinese economy and the blue is the US economy. And you can just kind of see historically that it seems that like the Chinese economy is gradually getting closer and almost at a point where it's going to overtake the US economy. And you can see the blue line, the US economy, where it's in gradual decline. And this is like historically, if you look at the bottom, you know, it gives you the timeline of this kind of trajectory of the downward cycle with the US and the upward cycle with China. This has been happening since before the year 2000, right? So this is not something which is happening instantly. This is something which is a gradual progression or a gradual change. So what does that mean? This change in economic superpowers that may happen, right? It looks like it's going to happen. This could, I mean, it's very difficult to predict, and anyone that's going to give you any kind of projections, whether that's things of this nature or like future price action, all of these kind of things, you know, future value of shares, no one can predict the future. All we can do is look at data, look at statistics, look at information, study it, and kind of figure things out for ourselves. And looking at this, it seems in the future, it looks like the Chinese economy will overtake the US economy. Historically, no economy has remained as a superpower consistently throughout, and you can see this from the chart where there was a point where there was the Netherlands that was then overtaken by the UK, that was then taken over by the US, and now it looks like it may well be China's turn. The next company is Tencent, and Tencent is the biggest company in China by market cap. Much like Alibaba, they specialize in the same kind of things: cloud computing, artificial intelligence, automation, e-commerce, software. You know, this is like a huge conglomerate company as well, with their fingers in loads of pies. And again, what with this wave in AI, it kind of seems to be sensible to be like looking at companies that are like serious about it and potentially big players as well. And Tencent are the biggest player in China. And again, if you look at the table with like the price action, not necessarily the cheapest it's ever been. It's at $36.50. The cheapest it's been was around $25, right? But again, like I said before, you know, you're never going to time the market perfectly. And again, it's the same thing of like looking at a stock at the price it's at now, and looking at the scope for growth or movement up. So, you know, like I said, the price currently is at $36.50, the highest it's been. You know, at its boom, it was at 100. And so again, much like Alibaba, it's about, you know, if this is a stock that interests you, for example, if you see value in what they offer to the world, the service they offer to China, you know, where might this share price go in the future when the Chinese economy recovers? And again, it's this thing of like, people are too short-sighted. They look at the immediate news and they make decisions on immediate news without having the foresight to look at like 3 years in the future, 5 years in the future, 10 years in the future, and where this company may be. And I suppose one of the big things that's not been priced into the value of these shares is that like both of these companies, right, they have operations in Europe, or they have presence in Europe, and certainly in Tencent's case, they have presence in the US through a number of subsidiary gaming companies and gaming studios. And again, it's this thing of like, the news is just telling you what's happening in the Chinese economy, right? But it's not really going deeper and kind of establishing the business, the structure of the business, how it's set up, the different forms of revenue that it can generate from different countries across the globe, you know. And the same can be said with Alibaba. You know, they have presence or they have offices in Spain, France, and I think Germany as well. So again, it's this thing of like, there's a huge misrepresentation, or like what the news doesn't tell you is like the stats and facts about a business, its presence, like the markets it's in, the locations it is across the world, you know. It just tells you like the bad news of what's happening immediately, and that's something that you kind of almost have to get past and just focus on the analysis or the observation of the business, its product, its service, its presence, its people, and that kind of thing as well. And the next company is JD.com. They are rated 34th biggest company by market cap in China, and they specialize in things like AI, in autonomous driving, in e-commerce. They again are another huge conglomerate with business in a number of different sectors, which again is great in terms of diversification. And again, it's one of these things of like the market is not kind of really establishing this company in terms of like what it offers to the world. You know, they're only looking at the Chinese economy, and I think that the price of JD at the moment, you know, is reflecting like the bad news in China, and it's overlooked the fact that this company has reach in the US. You know, you can buy stuff on JD.com via Google. You know, it has markets, it's tapped into markets in like Brazil, Peru, Cambodia, Chile, Denmark, Norway, Finland. You know, it has reach across companies that are in Europe and also emerging economies as well. And again, it's this thing of like projecting, looking at the future, right? You know, looking at the moves the company is doing right now, looking at its expansion and reach right now, and this is only set to improve. And again, it's like capitalizing on bad news. In bad news, in fear, in panic, there is opportunity. And I say that these three companies, they represent, if you're looking for value, for opportunities, and you're looking to hold on with view of, you know, a longer period of time, like 5 years or 10 years, these companies represent really, really good value. And again, if you look at the price history of JD.com, you know, currently it's at 98.30 Hong Kong dollars. And just this year alone, you know, in better economic times, it was up at around 250. And again, if we look historically as well, you can see it's gone up to like 400. And again, like I said with the other ones, you know, I always look at price in terms of where it can go up. So for example, where it is right now is not necessarily at its cheapest it's ever been. The cheapest it looks like was around 93, but it's very much near there, you know. And the upside, what is the upside? From 98, the upside could go up to like 200, 300, 400 based on, you know, like I said, the market being in a cycle and trying to time yourself so that you're in at the lowest point or thereabouts, having that long-term vision, having that long-term projection, and potentially, you know, if you wanted to sell it, is like looking at a time when everyone's happy, when everyone's optimistic, when the Chinese economy is booming. Maybe that's a time when you want to consider selling, or you may want to hold. It very much depends on your like personal investment strategy. And so in the link in the description below, I've put like a link to this website that I use. It's really helpful for me, like in terms of like when I'm doing research, if I'm looking at emerging markets, new companies that I'm not yet aware of, in order to like look at new opportunities, I use this resource. It's called companiesmarketcap.com. You can see it up on the screen now, and you can just play around with this and have a little look, and you can sort things out by market cap, earnings, revenue, also by country as well, and global ranking. So for me, it's like a really good resource just to do some research, to get to grips with new companies, to understand different markets, so that you're not necessarily putting all your eggs in one basket or investing just in the US, for example, or just in the UK. But look, thanks for watching. Have a great day and all the best. Take care.